How's everybody doing? Oh my gosh, guys, this week was a little bit crazy with the CPI data coming in at a 0.9 month-over-month percentage. That is extremely hot. That blew past all the estimates that Wall Street had put on the CPI data for June, and it has got the market all sorts of wigged out. So we'll go ahead and dive into that CPI data, so stick around. And then on top of that, I'll give you guys some news to be watching next week that could possibly be affecting the market. So diving straight into this CPI data, it was a big beat. You know, Wall Street was looking for maybe like a 0.5 to a 0.7. And so when we came in at a 0.9, it really did freak out the markets. Nobody was expecting a 0.9. We were hoping to maybe start to see this inflection down towards maybe a little bit of deflationary pressures rather than inflation. I myself was kind of a little topsy-turvy on how I really felt about it, because I talked a little bit about that in one of my episodes that I did last week, talking about how I'm really seeing a lot of wage inflation where I'm at, and how I think wage inflation is almost like a virus. It just kind of gets spread around all over the place. As soon as it starts here, it kind of just has this ripple effect through the economy, and it winds up increasing cost of goods from people getting paid more money. Not saying that people getting paid more is a bad thing, but it does drive inflation, in my opinion. So when I first saw the 0.9, then I went ahead and wanted to see where these inflationary pressures are coming from. And so to do that, I went onto the Bureau of Labor Statistics website, and I will link that down below in the description so you can go through this as well for yourself to see where these inflationary pressures are happening. And what I discovered were the things that had the very highest inflationary readings for June are actually things that kind of make sense for a reopening economy. Things like vehicle rentals, lodging like Airbnbs or away from home staying, and even some weird things like dresses for women. All of those things right there point kind of to more of a reopening type inflationary thing. All of that to me makes perfect sense. People are going back into the world, wanting to go travel and do different things. They're staying at hotels more to try and get out of their house. They've been trapped there for a whole year. Dresses, so women are going out more often. They got to get a new dress, different things like that. Those make sense and point towards reopening. The big ones, though, that are kind of an issue, in my opinion, and that point towards different problems that we're having in the economy right now, and the very biggest one is used vehicles. Used cars and trucks specifically. They were up 10.5% just in a month. And last month they came in really high too, something like 12%. So that's nearly 22% increase on the price of used cars and trucks. Now, we kind of know already why that's happening, with the supply chain shortages causing semiconductors to not be available for new vehicles. A lot of people are forced to go out there and try to find a used vehicle if theirs, for instance, goes down on them. And with that supply not being there in the new market, a lot of people who would rather go buy a new car are almost forced to go and buy a used car. And of course, used car dealerships are going to take advantage of this and see that there's plenty of demand and very little supply, and prices inevitably go up. The other things that we're seeing go up are meats. Meats, to me, I'm not too familiar with how the market works in that, so I'm not going to try and claim to be an expert, but it is interesting that we are seeing meats still inflate. They went up around, what's my notes say? They went up around 3.1% just last month. And then last but not least, we saw fuel and oil go up about 2% last month, as well as another bigger mover on there. And that affects everybody and also kind of affects the overall economy. All right, guys, so other than the CPI data, we also had the PPI data come out this week, and it did go up about 1%. So that is just one other little thing to note. If you do watch the producer pricing index, that is 1% up from last month. So we'll keep our eye on that in the future coming months as well. Now, in the week coming, here are a few catalysts that I'm personally going to be watching that I think that you guys could be watching as well. The first one is the initial US jobless claims. So this number actually is people going in and newly claiming unemployment. So these are people now newly taking the unemployment benefit. So we like to watch this number as it can strongly move financial markets. If we have a sudden spike in initial jobless claims, for example, then that means a lot more people are not working, but instead taking benefits on the government system from unemployment. So it's something that we like to watch. Right now, the consensus for this number coming out is 350,000 initial jobless claims. So So we could see Wall Street possibly react a little bit negatively if we do come in over that 350,000 number. So definitely watch that. And then the only other really big catalyst, and it's not even a huge catalyst, is the PMI that's going to be coming out later in the end of the week. I'm going to be watching that because it is a measurement of how the economy is either expanding or contracting. In other words, the economy is getting faster or slowing down a little bit. So we were able to look at that for manufacturing, and then also another big one is kind of services. So we can see how the manufacturing is either speeding up or slowing down, and we can also be watching how services are being needed compared to manufacturing. So I also wanted to talk about how the market has been selling off a little bit this last week, and kind of the week prior, I kind of thought it was starting to look like a crash. And now we can look at the Russell 2000 and a lot of the smaller cap growth companies that I myself really personally enjoy investing in, and we're starting to see that indices start to roll over. But towards the end of the week on Friday, we also started to see the S&P putting up some red days. And if you go and take a look at the S&P's chart, you can see that we do have an inflection happening right now towards the downside. So it's going to be interesting to keep our eyes on this S&P possible correction that could continue next week. I'm going to definitely be watching the US jobless claims quite heavily this week, as I think with how the market's feeling and being so emotional that it really could move the market quite a bit depending on how that's coming in too, with these hot CPI numbers and the fact that the US Treasury's been doing all sorts of weird stuff by actually having the yield go down. So for some reason, people are pushing into bonds super heavy hard right now, which means that they're maybe actually thinking like, hey, we want to get out of the stock market and go into something a little bit more secure. So I think that some signs are pointing towards that we might be ready to see an S&P 500 correction. And you know, I kind of was thinking the same thing last week, and this week it doesn't make me feel any better about it. I'm definitely not feeling super warm and fuzzy. In our $1,000 stock account, we are unfortunately fully invested right now, but we're going to hold on that account. In my personal account, I kind of went with my conviction on how I was feeling the market, and I did pull about 75% out of stock and took profits on some of my favorites that I've been holding for some time. That way, if this market does wind up correcting any more, I have some better chances to get in on some better opportunities in some of my favorite companies. All right, guys, so that's enough rambling. So thank you guys so much for checking out this video. I hope you did enjoy it. If you do, please like and subscribe and hit that notification bell if you want to watch any more of my videos that are going to be coming out. I'll be uploading about 4 times per week. I also do episodes for a $1,000 stock account if you do want to follow it. Right now, it hasn't been the best market to be investing in with only $1,000, but hey, I want to be fully transparent with you guys and show you the ups and downs of trading on a small account. So if you're interested in that, also hit that subscribe button. Well, thank you guys so much again, and I hope you have a great week.